Hello, everyone. The stock market is always said to be related to the property market. Is that the case? Now let's look at this micro case about the relationship between Shenzhen's property and stock markets. Ever since the beginning of the pandemic in 2020, the price of newly built houses in Shenzhen stopped climbing and remained steady over the 3-year period. According to Figure 1, the price of new houses in Shenzhen has been hovering at the price range of around RMB 55,000 to RMB 65,000. On the other hand, the price of existing houses had a rise in 2020, with the highest price being around RMB 85,000. Since then, the price of existing houses fell down to around RMB 65,000 in 2021 and remained stable without much fluctuation. At the meantime, we have witnessed a similar trend in the Shenzhen Stock Exchange Component Index. According to Figure 2, the SCSE Component Index fell shortly in the first half of 2020 due to the pandemic and then rose and peaked at the level of 16,000 in 2021 Q1. After that, it had embarked on a 3-year-long decline, evaporating about half of its values. Citing from the Shenzhen Stock Exchange's Market Statistics Yearbook, the number of newly listed companies on the Shenzhen Stock Exchange dropped every year after 2021, as shown in Figure 3, partly reflecting the pessimism in the IPO market. So, we have known that the SCSE Component Index, the number of newly listed companies in Shenzhen house prices had all shown similar downward patterns after the pandemic. But why? Are there any causal relationship between them? Now let's dig deeper into this question. It is reckoned that there are a few factors contributing to this trend. First, the pandemic has brought a lot of uncertainty to the world economy. Ever since the beginning of the pandemic, multiple highs and lows in the seriousness of the pandemic have been recorded. Due to such uncontrollable conditions, it was insurmountably difficult for companies to determine the demand and supply. On the other hand, government policy is also unpredictable. For example, there were a few lockdowns in various provinces in China, including Shanghai, Wuhan, and Huanggang, without previous alerts. All these have created many uncertainties and massive economic loss. For example, it is estimated that solely a lockdown in Shanghai had led to a loss of around 2% of the national GDP that month. These uncertainties also dissuaded companies from postponing their IPOs. After that, the pessimism in the economy can also be attributed to the disruption in supply chains. The pandemic had put a halt to many production activities. It might be hard, if not impossible, for firms to resume their production activities from scratch when the economy is seeing some recoveries. On the demand side, people were advised to stay at home and avoid going to crowded places. Even when there were some ameliorations in the pandemic, a large majority of citizens might still opt for staying at home due to safety concerns. With much weaker demand, it is not surprising that the revenue and margin of listed companies are pressurized, leading to a lower stock price and consequently downtrend in the SCSE Component Index. As a result, both supply-side and demand-side factors are unfavorable for the economy. In terms of causal relationships, it is thought that there might not be a very strong relationship among them, despite their similarities in their doomed performances. When it comes to economic downturns, it is typical that most of the industries would perform badly at the same time. Their similarly poor performances are collectively the results of the whole economic cycle. Therefore, it might still be hard to establish a direct causal relationship among them. Speaking of the stock market and the property market, they are often related to the wealth effect and the income effect. So, what is wealth effect, and is it the same as the income effect? The wealth effect is a behavioral economic theory that suggests that individuals change their spending habits by changing their assets' prices and views on their perceived wealth. It is shown that as the price of an asset increases, the security related to the asset increases, and the buying habit positively increases consumer spending. The increased spending happened irrespective of growth or decline in income. A company hires more, security traders buy more, and consumers buy more properties due to the wealth effect. It is attributed to the psychological effect of consumers feeling wealthy when their asset prices increase. On the other hand, the income effect refers to the change in consumption patterns due to a change in real income. It is the effect of a change in income on the quantity demanded of a good or service, assuming that the price of the good or service remains constant. The income effect can be positive or negative, depending on whether the good is normal or inferior. Therefore, the wealth effect and the income effect are not identical. The wealth effect is related to changes in asset prices, while the income effect is related to changes in real income. People generally regard housing as a normal good. But is it the truth? A normal good is one that experiences an increase in demand due to an increase in a consumer's income. Examples of normal good include food, clothing, and household appliances. Therefore, it is reasonable to assume that houses are normal goods as well. As a consumer's income rises, the demand for houses also increases. However, it is important to note that the relationship between income and demand for houses is not always straightforward. Other factors, such as interest rates, availability of credit, and government policies, can also affect the demand for houses. For example, if the interest rate is too high, the willingness for purchasing a flat might be low. Or if there are too many policies discouraging the purchase of flats, people's consumption decisions might also be affected. As a result, it is hard to establish a direct causal relationship between them. So, does the decrease in the number of newly listed companies imply a weakening of the wealth effect? Does the decrease have a negative impact on property prices in Shenzhen and the trading volume of property? The wealth effect is a phenomenon where an increase in the value of assets, such as stocks or real estate, leads to an increase in consumer spending. The decrease in the number of newly listed companies may not necessarily imply a weakening of the wealth effect, but it could have a negative impact on the stock market and the economy as a whole. As for the impact of the decrease in the number of newly listed companies on property prices in Shenzhen, it is difficult to establish a direct causal relationship. However, the decrease in the number of newly listed companies could have contributed to the downward trend in the CUHK component index, which tracks the performance of the Shenzhen Stock Exchange. The decrease in demand for housing due to the pandemic has led to a decline in house prices in Shenzhen. This could have contributed to the downward trend in the CUHK component index, as many companies in the real estate sector are listed on the Shenzhen Stock Exchange. So, will the market of Shenzhen property recover if the number of newly listed companies rebounds in the future, as you might wonder? It is actually difficult to tell because they depend on respective government policies. For example, the number of newly listed companies depends on the tightness of the approval of newly listed companies, while the condition for the property market is determined by the amount of tax on the purchase of flats or regulations on non-first-time buyers. Therefore, it is difficult to predict whether the market of Shenzhen property will recover if the number of newly listed companies rebounds in the future. However, the reopening of the Hong Kong-Chinese mainland border has significantly rebounded the overall residential transaction volume in Hong Kong. It is possible that a similar trend could occur in Shenzhen if the number of newly listed companies rebounds in the future.